Some pressure being seen on that front as well. But let's get a move on then. Talk about the global coverage this morning. Let's start by talking about the big news yesterday post markets, and just a day after the Fed chairman hinted at a September rate cut, the Bank of England went ahead and delivered its first rate cut in more than 4 years, taking the key interest rates to 5%. Policymakers ultimately voted 5-4 in favor of the reduction, with Governor Andrew Bailey saying that the committee would move ahead cautiously. The bank rate had been held at a 16-year high of 5.25% since August 2023. Bailey alluded to easing inflationary pressures that have led them to finally cut rates. Let's also go across and listen in to what Siddhartha Sanyal of Bandhan Bank said about RBI's cues from the Fed and the Bank of England's rate decisions.
Das here at home made his choices pretty clear. He clearly indicated in his case the domestic factors are far more important. Obviously, global factors do play a role, but domestic factors are far more important. Looking at the domestic factors, very clearly inflation has cooled off, though there has been a bit of an uptick in the last spring. I think we are on a comfortable trajectory there. I would not really still expect him to cut in this particular policy, and in fact in the next few policies also. But what I would definitely expect that RBI start infusing a slightly higher quantum of liquidity in the banking system. If you have seen over the last several months, there had been a bit of a crunch of liquidity off and on in the banking system. Several banks had to raise their deposit rates very significantly. I would expect the central bank to start infusing a larger quantum of liquidity in the market instead of thinking about tinkering the rates.